Okay, dear students, we will do module 90. This is deductions from gross total income. Two sections I will explain. Section 80 triple C and second one is 80 CCD. So here, first the features of 80 triple C. This deduction is allowed only to individuals. See, some sections you know that it's allowed to individuals and HEF. Here you have to remember it's only allowed to individuals. Now allowed only under the old tax regime. So you have to remember new tax regime it is not possible. Now next is allowed for contributions or amount deposited in LIC or any other insurer to effect a contract of annuity or pension out of a fund set up under section 10 subsection 23 AAB. The amount must be deposited out of income chargeable to tax. So you have to remember it's for a pension fund, and here one more important feature, it should be deposit should be made out of income chargeable to tax. That meaning if I am a salaried employee, from my salary I can deposit. If I am depositing it with the agricultural income from India, I cannot claim this exemption. Next is rate of deduction is the actual amount paid or deposited under this scheme excluding any interest or bonus accrued during the year or rupees 1,50,000 whichever is less. So you have to remember 1,50,000 exemption aggregate is available for 80C, 80 triple C and 80 CCD. So here whatever the actual amount contributed only will be eligible. The bonus accrued or the interest accrued nothing will be counted. Next point, if the assessee or his nominee withdraws any amount or pension by surrender of this plan, either in full or in part, it will be taxed in the year in which such pension is received or withdrawal is made. That meaning, if anybody is withdrawing that amount, it will be taxable in the year of withdrawal. Now, second is features of section 80 triple C, 80 CCD. Now, deduction is allowed only to central government employees. So, 80 triple C we have seen, the second section 80 CCD. Only central government employees, not state government. They should be employed by the central government on or after 1/1/2004 or by any employer or self-employed. So, central government employees and self-employed individuals or even in the private sector also is possible. This deduction is allowed to the eligible assessee mentioned above who in the previous year paid or deposited any amount in the pension scheme notified by the central government. So this is also important. They have to deposit in the pension schemes. Subsections are there. 80 CCD subsection 1. This is for employee self-employed contribution. Second is 80 CCD 1B additional deduction. That is additional deduction is the 50,000. So you have to remember 80 CCD 1 and 80 CCD 1B are for employees contribution. Employees contribution. Now next section is 80 CCD 2, that is employers contribution. So 80 CCD 2 is for employers contribution. This distinction is important because new regime is continuing with the employers contribution deduction, whereas employees contribution is not available under the new tax regime. Now conditions for eligibility under section 80 CCD. Old regime we will explain, new regime we will explain, and we will make a comparison. So as per the old scheme, this deduction is available only to those who opt for the old scheme. Now contribution must be made to two pension schemes. One is National Pension Scheme or NPS. Next is Adult Pension Yojana, APY. Now for salaried employees, I told you subsections are there. 80 CCD subsection 1. Deduction allowed is up to 10% of salary. And salary here is salary plus basic salary plus dearness allowance. Because we know that for computation, pension, gratuity and all, the salary definition is different. So here salary, basic salary plus dearness allowance. Now subject to overall limit of 1,50,000 under section 80C, 80 triple C and 80 CCD. So all the three sections combined, the exemption can claim only up to 1,50,000. Now self-employed employees, this is the subsection 2, 80 CCD subsection 1. Deduction allowed is up to 20% of gross total income. Self-employed people also subject to combined limit of 1,50,000. Now next is section 80 CCD 1B, that is the additional deduction of 50,000. Extra deduction up to rupees 50,000 for contribution to National Pension Scheme. This deduction is over and above rupees 1,50,000 limit of section 80C. So as per the old scheme, 1,50,000 plus additional 50,000 they can claim. Now, section 80 CCD subsection 2. This is employer's contribution. This is continuing under the new scheme also. So, deduction for the employer's contribution to national pension scheme account of the employee is eligible. Allowed deduction up to 10% of salary. Salary meaning basic salary and DA for private sector employees, and up to 14% of salary for central government employees. And no 1,50,000 limit applies here. Now, tax treatment on withdrawal under the old scheme. 60% of the accumulated corpus at retirement is tax free. But the balance 40% they have to use for purchasing an annuity or pension. Now, pension received later is taxable as income. Now, example for section 80 CCD under the old scheme. Suppose a salaried employee has a basic salary plus DA amounting to 6 lakhs annual salary. Contribution to national pension scheme is 1,20,000. So, what is the deduction allowed? Under section 80 CCD1, 10% of salary. Salary plus DA value total is 6 lakhs, 10% is 60,000. Now, additional deduction 80 CCD 1B 50,000. So, total deduction 60,000 plus 50,000, 1,10,000. Now, under the new tax system, section 80 CCD1 and section 80 CCD1B are not available. That is, employee's contribution is not available. But the system, thus an employee's own contribution to NPS does not give any tax deduction in the new scheme. But deduction under section 80 CCD subsection 2 is allowed even in the new tax system. Now, new tax system deductions under section 80 CCD. Employer's contribution to national pension scheme is deductible up to 14% of salary. Salary means basic salary plus DA for central government employees, and 10% of salary, basic salary plus DA for other employees, whether they are in the private sector or state government. Now, when we compare the old scheme and the new scheme for section 80 CCD, you can see that under old scheme, all the exemptions are allowed. Employees' own self-contribution, additional 50,000, and employer's contribution. Whereas if you see the new scheme, employees' contributions are not allowed. Additional 50,000 deduction is also not allowed. Only allowed deduction is 80 CCD subsection 2, that is employer's contribution. So this is the difference between the old scheme and the new scheme. And I have explained two sections in this module, 80 CCC and 80 CCD. This is what I wanted to explain in this module. These provisions you have to learn, because when we will do the problems, you have to use this. Happy learning. Thank you.